Hey, hi, this is Gautam. Welcome back. So, the themes that have played out in developed markets like the US or Germany, so those themes will very likely they'll eventually happen in India as well. Yeah. So, one such theme is the healthcare distribution theme. Okay. So, healthcare distribution as an industry consolidated over time in the US, Germany. Okay. So, that consolidation is beginning to happen in India as well. Okay. So in this video, we'll talk about that theme, and also we'll discuss one of the businesses which is operating within that theme, which is Entero Healthcare. Okay. See, this is an education channel. Okay, so in this video, not only will I be discussing this industry and this business into healthcare, okay, but also I'll take you through my equity research and valuation framework. Okay, so I'll take you through this framework and we'll apply this framework to this company, Entero Healthcare, and we'll try to gauge key what are the moats, if any, in this business, Entero. Okay. And then last but not the least, okay, we'll do a quick DCF valuation. I'll walk you through the outcomes of my quick DCF valuation of this business. Okay, so it would not be detailed valuation, it would be a very chalu valuation. Okay, so please do not act upon it. Okay, so yeah, so with that said, let's dive into this video and please write to me if you have any questions. All right, thank you. All right, so let's try to understand the financials of this company at a high level on screener. So just under 5,000 CR market cap company trading at 44 times earnings. Okay. The stock price hasn't done much since the time it got listed 2 years ago. Okay. The same level it was when it got listed. Okay. So nothing at all. MedPlus, I don't think it's a competitor of this firm. MedPlus isn't into retail. Okay. Any which ways, let's just move forward. If you look at the sale number, 5,000 CR is a sale. Okay. Look at the margin, 3%. Now trailing 12 months basis by 4%. So see, this is a low margin, high asset turn business. Okay. Volume business hai. It's a low margin, high volume business. So if you look at the asset turns, compare the sale with fixed assets. Okay. So 600 CR assets hai, under 600 CR. So it's a 9-time asset turn business. So it's a high asset turn business. Sales is 9 times fixed assets. Okay. Although high asset turn here, but this is a high working capital. It's a working capital intensive business as well. It hasn't delivered on any free cash, on any cash flow, negative cash flow. All right. So in fact, management expects they would be cash flow positive soon. They would be able to release working capital. Okay, in fact, so debt receivable, they collect cash from the customers in two months. Inventory turn is under 2 months as well. Payable is 30 months. Total cash cycle is 80 days. Okay, and the management is trying to get closer to around 60 days. So if that happens, then they'll be release a lot of working capital and they would be able to deliver a positive cash flow if that happens. All right. So see, so as I was saying, this is a low margin business, but this is a reasonably higher capital efficiency business. So in capital efficiency, you have sales divided by फिक्स एसेट्स प्लस वर्किंग कैपिटल सो फिक्स एसेट तो कम है लेकिन वर्किंग कैपिटल ज्यादा है okay? तो उस वजह से दैट्स व्हाई कैपिटल एफिशिएंसी is not as high as asset turns, but still it's pretty high. Okay, and you could expect the capital efficiency increases over time because that is a trait of this business actually. If the management able to execute, okay, तो आप अगर यूएस पेयर्स देखो तो उनके भी कैपिटल एफिशिएंसी काफी हाई रहती है, मार्जिन इज ऑन द लोअर साइड. सो combination of capital efficiency, high capital efficiency and low margin gives you return on capital. So इनका भी return capital closer to 3 times 4 around 12 है. So they're not beating cost of capital. Okay, right now. Okay, yeah, so this is about their business, financials at a high level. All right, so now let's understand the business model of this company further. And before I do that, let me also give you a very quick walkthrough of my business analysis equity research framework. All right. All right, so here's my framework that we can use to thoroughly research and analyze the business. Of course, the first is industry, okay, and then fundamental analysis itself, okay, and third is valuation. Okay, so within industry, of course, have to look at the size of the market. What is the size of the market right now? How big the market can become in the future? So that is something, of course, you got to get a sense of. Okay, then of course the segments within the market.
any tailwinds or headwinds in the business, okay, if the industry is cyclical or structural. Okay. Now, what's the nature of the competition in any business, right? And what is their respective market share? And of course, the value chain of the business model. Yeah, and so business model is essentially the model through which the business makes money. Okay, and value chain essentially is a double click on the business model. तो आपको समझना है for any business. Okay. So, of course, for this particular company at a high level, we try to get a sense of the market. Okay. Or of course, tailwind is the consolidation that is happening, right? जैसे developed economies में हुआ, the same developing economies में होगा. Okay. We'll understand the competition as well. And of course, okay, after this, we'll also look at the business model. Okay. और फंडामेंटल्स में क्या होता है सी वी द फाइनेंशियल एंड ऑपरेटिंग रेशियोज वी जस्ट एट अ हाई लेवल वी अंडरस्टूड द फाइनेंशियल्स ऑफ दिस कंपनी एट अ हाई लेवल एंड ऑपरेटिंग रेशियोज आर समथिंग व्हिच इज स्पेसिफिक टू एवरी इंडस्ट्री. ओके, तो फंडामेंटल एनालिसिस में ये देखना होता है. एंड देन बिजनेस मोट, you got to assess key if the business has any moat, yeah, any source of competitive advantage. So this is something again we're going to talk about in this particular video. Key, what is the framework that you can use to gauge कि business में moat है कि नहीं. ओके, और वो कितने टाइम तक मोट सस्टेन रह सकता है. सो दैट इज समथिंग वील डिस्कस एंड अप्लाई टू दिस कंपनी. एंड देन of course, the management quality, the corporate governance, red flags. Okay. So in fact, I have made a very detailed video, okay, on how to read an annual report. Okay, and in the annual report, how you can gauge the quality of the corporate governance or red flags. Okay, and the example that I've taken is of this company itself. Okay, तो वो वीडियो आप देख लो, उसमें मैंने बहुत डिटेल में कवर किया है ये चीज. Okay. So, and in fact, this being a small company, so you should of course be spending time, a disproportionate amount of time on the corporate governance or trying to find out what are the red flags. Of course, I'll talk about some of them, some red flags in this video, which or rather the key monitorables, okay, जो आपको ट्रैक करने हैं. Okay, लेकिन holistic के लिए understanding के लिए you can check out the video. Okay, I'll paste the link of the video in the description. And of course, last but not the least, the valuation. Okay, so valuation you have relative valuation, and you have reversed DCF. Okay, and then you have the three statement DCF model. So in this video, of course, so what we'll do is I would not do a detailed three statement DCF. I'll just quickly walk you through the outcomes of my quick chalu DCF valuation. Okay, to keep things simple. Otherwise, video बहुत लंबा हो जाएगा.
Now, let me open up. Let's understand more about this industry, more about this business, understand the business model of this company. Okay. So for that, let me pull up a very good report which has been developed by Ambit Asset Management. So Ambit Asset Management, they have made a very good report on Entero Healthcare and they've made it available for free. So let me pull that up. All right. So I think this is a very good report. Ambit so let me take you through it. Okay. And in fact, let me directly jump to the pharma value chain. Okay. All right. Now let's understand the value chain. Okay. So up top, you have pharma and healthcare product manufacturers. Think of GSK, think of Abbott, think of Erin Life Sciences, so on and so forth, right? And they make pretty high margin, 40 to 60%. And then from there, the product is sent to carry forward agents, okay, which make a margin of 2 to 4%. And then it's sent to distributors. Okay. And there are 65,000 distributors in the country. It's a pretty fragmented market, and they make a margin of around 8 to 10%. And from there, distributors, they distribute products to retailers, drugstores, hospitals, and physicians. All right. So that's the value chain. Okay. So of course, a lot of hospitals are listed in India. The organized hospitals are listed in India. And then you have pharma, a lot of course, pharma manufacturers are listed as well. Okay. So if you want to play the healthcare theme differently, then distribution may be a theme to play, because given the market is very fragmented and it's expected the market will be consolidated in the future. Yeah. So if I go to the next slide, I think rather next page rather. So I think it's a very good, these pie charts, they depict a very good story. So if you see in India, 90% of the market is fragmented. When I say fragmented, you have a lot of mom and pop stores, okay, mom and pop distributors. Okay? In fact, how much? There are like 65,000 of them, okay, in the country. Okay? And only 10% of the market is fragmented between, or rather, is sorry, 10% of the market is consolidated, and it is shared by three players. Okay, and of course, one of them is Entero Healthcare. Okay, and then in the US, 92% market is consolidated, 8% is fragmented. In fact, where India is right now, US was at the same place around 50 years ago in 1970s. Okay, in 1970s, US market was very fragmented. Okay, very similar to where India is at today. Okay, so of course, the market in India, this distribution space, healthcare distribution space, is expected to be consolidated in the future over the course of 10, 20, 25 years. So it has a lot of legs to grow. It's a very interesting space to be in. Okay. Right. And if you look at other countries, Germany, other developed countries rather, 95% of the market is consolidated in Germany. Okay. And China, it's 45%. Okay. And if I just talk about the US, okay, US, I'm familiar with the US market. This 92% market is distributed between three players. One is your McKesson, the other is Cardinal, and third is Bergen. And Bergen now has a different name. So three players, they control 92% of the market, right? Okay. And yeah, so if I talk about India, India may three players. One is Entero Healthcare. The other is Kaimed. Kaimed has been acquired by Apollo. And if I go to the next page, you would see Kaimed distributes 48% of its business comes from Apollo. Yeah, Apollo, of course, as I said, acquired Kaimed. Okay. Let's see if there's something else. Yeah, so I think they have pulled this slide from the annual report. So a lot of look at the distribution. I think it's present almost in every state in the country. Entero Healthcare, yeah, and how they've grown. They have grown through acquisitions. All right. So this is in fact this is the business model. Think of Entero as an acquisition engine. Okay, and it goes to different states, different places, and it goes about acquiring mom and pop distributors. कि मतलब छोटे छोटे डिस्ट्रीब्यूटर्स जो होते हैं लोकल उनको जाके एक्वायर कर लेता है. And honestly, this is the way that players in the US have grown as well. Okay, that's how the market is consolidated. Okay, so Entero Healthcare essentially is an acquisition engine. जाके every state it goes and acquires every place it goes and acquires local distributors. Okay, and for every distributor it creates a new subsidiary. ठीक है, something that we'll touch upon in detail when we review the annual report. ठीक है, in terms of this is the number of SKUs. ठीक है, I'm doing a very quick high in the sky walkthrough. Revenue देखो, and I know we already looked screener में. So revenue right now, of course, is growing 30% CAGR. Now it's over 5,000 CR. EBITDA margin is around 3%. Okay. Last 12 months is I think it's closer to 4%. I think EBIT is closer to 4% in fact. So as I was saying, this is a low margin business, but this is a high asset turn business. Working capital very intensive hai. It's very intensive, but overall capital intensity, capital efficiency is high. Okay. So that's the nature of the business model. Okay. So these are some of the acquisitions that they have. In fact, they have done like 47. They have 47 subsidiaries, as we'll see. Okay, 47 distributors or subsidiaries. These are some of the profitable distributors who have, or rather, the distributors which have grown above 60%. Okay, from these different places. तो आगे बढ़ते हैं. All right. I think, yeah, we've seen the business model. We have looked at the financials. Okay. So now, if you're a budding investor interested in learning thorough fundamental analysis and valuation, or if you're an aspiring equity research analyst, financial analyst, or a consultant who's interested in learning these skills to get into such roles, okay, then I have a program suited to your needs. Okay. In my equity research and valuation learning program, I cover quality and well-researched content. I cover diverse industry business models. Okay. And I have a growing community. Okay. So, and I also have the list of topics which I cover, which on the slide, which will help you become a well-rounded, thorough analyst. All right. So get in touch if you interested in learning more details about this program. All right. Thank you. All right. See, any business that you analyze, you got to assess key if there are any moats in that business. All right. So let's try to do that for Entero Health. Okay. Before we get onto the valuation part. All right. Right. So this is the opportunity that we've already discussed. Of course, it's a very fragmented market. In India right now, the organized players, they have a share of 8 to 10%, which is, of course, distributed among three players, Entero being one of them. And the US, of course, the organized, 90% of the market is organized. And in China, 40 to 45% organized. So there's a massive runway for growth. That's all this particular slide is talking about. Okay. So let's move forward. See, now, one of the key drivers of Moat in this business is the distribution or the scale. Okay, if you see, this company has presence in 20 states. They have been going around acquiring those local mom and pop distributors all around the country. Okay, so it has given them a lot of scale, a lot of distribution scale in their business. Okay, so that's one of the drivers of moat. Okay, let's move forward. The other is product portfolio. So right now, this business, they have 85,000 SKUs, okay, which is around three times the SKU of their competitor. Okay, of course, competition, of course, would be increasing their SKUs, but the advantage of having high number of SKUs is, okay, if you read here, see hospitals and pharmacies, right? They'll rather prefer fewer distributors with broader product portfolio to avoid managing multiple vendors, right? Because it's less of a headache for hospitals and pharmacies because they rather do business with a distributor who has a broad product suite, right? And then kind of do business with multiple small distributors. So एक ही advantage हो जाता है. But again, competition, of course, slowly over time, they will be increasing number of SKUs as well. Okay. So this is a driver of moat. Okay. So this is the second driver of moat. Let's go further. Now let's talk about the competition itself. See, in this business, okay, you have Kaimet. Kaimet is a company which has been acquired by Apollo. So more than 50% of the sale Kaimet ka comes from Apollo itself. Okay. Now see, so Kaimet of course is a formidable competitor. Okay? But see, the thing is there is channel conflict here. So there is certain conflict of interest. The other competitor is API Holdings. Okay. So API Holdings back in 2019, I believe, PharmEasy and another company. PharmEasy, of course, is B2C. Okay. And the B2B and B2C company, they came together and formed API Holdings. Okay. तो क्या है कि PharmEasy has a lot of debt. Okay. So it's a lot of debt. So overall, the parent, this company has debt. Okay. So there is some kind of financial distress in this business. Okay. So they don't have a clean balance sheet per se right now. Okay. So, and then the next competitor is Sasta Sundar. Sasta Sundar is a regional player. That's the only listed player right now. And if you look at the financials on screener, it has negative. There is no profitability, and it's confined to Bengal and some places in the north. Okay, so it's loss making. So देखा जाए, Entro seems to be the only clean player. Okay, of course, Kaimet is of course also clean, but again, it has a conflict of channel conflict. Okay, so that's how the competition is right now in this industry. Okay, talking about the organized players. Now let's move further. Another source of moat could be capital allocation. Okay, see in this business. So the headline says proven integration capabilities. So I think proven is a strong word. I would say they are in process of proving their integration capabilities. I don't think I should not be using the word proven. They're in process of proving their integration capabilities. I'll speak to it further as well. Okay. See, this business is all about acquiring local mom and pop distributors. Okay. So it's a very operational heavy and integration complex business. Okay. So उनको seamlessly आप कैसे integrate करते हो within your business, that is what you got to check, and this is something, as I said, we'll discuss थोड़ा detail में. Okay. In this video. Okay. So again, capital allocation could be one of the drivers of moat in this business in the future. Okay. If they go about doing a decent job at integrating different local mom and pop distributors. Okay. But right now, let me tell you, in fact, pre FY24, they had 35 subsidiaries which they had acquired, and 55% of them were growing at a very healthy rate. Okay. So, so this particular stat tells you that they are doing a decent job at integration. Okay. Let's move forward. See, since this is a operationally complex, integration complex, operationally heavy business to do, okay, so you got to look at how's the corporate governance, something which we have discussed at length in the annual report analysis of this. So I've made a detailed video on how to analyze an annual report. And the example that I've used is of Entero Healthcare, this company itself. So उस video में I discuss the quality of management corporate governance at length. Okay, so I'll link it in the description. Okay, so here my larger point is key. This particular business has institutional ownership. Okay, so OrbiMed. Okay, so this particular fund has a 38% stake, and they also have their directors. Or OrbiMed के खुद के directors are, they are nominee directors in the board of this company. Okay, so there is some, you could say कि there is some good governance oversight in this business. Okay, so थोड़ा institutional ownership से आपको थोड़ा assurance मिल जाता है. Okay, all right. So let's move forward. So if I were to talk about some key monitorables, okay, So first is the working capital. So this business, as you would have seen when I was going through screener, this business has a negative cash flow right now. Okay. So if working capital days don't drop, ROIC will continue to be below cost of capital. Okay. If you see what the management has been saying, right. So if you see the working capital days in this business, it's around 70. And let's see what the management has been saying. So I just pulled open the earning call transcript. Okay. कहाँ गया? Yeah, if you see what the management has been saying, that we are confident of closing FY26 with working capital days of around 60. So what they are saying is they will be able to shave off 10 days in of working capital, which of course is going to translate into a lot of positive cash flow, which is something I baked in my valuation. So I'm taking management's word for it. All right. So ये important चीज है track करना. If this doesn't happen, then of course this is a serious risk to the business. Okay. Now let's go back to our slide. The other risk is, as I've been talking about, is integration failure. Okay, the capital allocation that may go wrong. In fact, if you look at my annual report analysis video, okay, I have seen key. What I've said is, what I've demonstrated is key there is an integration risk in this business. In fact, the guarantees that have been given out, the guarantees, that is the contingent liabilities that have been given out to loss-making subsidiaries, is around 15% of the book equity. So let's say if those subsidiaries, they continue making losses, okay, then of course there could be a damage, substantial damage to the book equity. Okay, so integration failure is something that you got to check. आप अगेन फिर रेपुटेशन एंड रिपोर्ट एनालिसिस का वीडियो देख लो, उससे आपको ये समझ में आ जाएगा कि इसके अंदर और कौन से मेट्रिक्स आपको ट्रैक करने हैं. The third is audit remarks. Okay? Something that you easily would miss, okay, unless you do not do a deep dive into the annual report. Okay, so क्या है कि this is just one of the audit remarks. So lot of the subsidiaries, of course, are audited by different auditors. Okay, so different auditors, they have flagged that there has been some misappropriation of funds, which to the tune of totally 3 CR. 3 CR is small in the grand scheme of things. If you compare the total profitability, this is not a big number, okay? But this is certainly a very important governance signal that you got to watch. Okay, ki what kind of uh, uh, tabs the management is able to keep on its subsidiaries, because local mom and pop subsidiaries है ना. Okay, तो उसमें आप मैनेजमेंट को अच्छे से पता होना चाहिए कि उनमें क्या चल रहा है. Okay, so this is something important. Next is I would not say it's a huge risk. I think it's a low to medium risk. Ki there is, of course, pharmacy manufacturers could directly sell to pharmacies and totally bypass the डिस्ट्रीब्यूशन इन बिटवीन. ओके, तो ये भी एक हो सकता है, लेकिन इसका रिस्क प्ले आउट ये लो है इन माय ओपिनियन. तो ये 4 रिस्क है मोटे मोटे इस बिजनेस में. okay? If you're a budding investor interested in learning thorough fundamental analysis and valuation, or if you're an aspiring equity research analyst, financial analyst, or a consultant who's interested in learning these skills to get into such roles, okay, then I have a program suited to your needs. Okay? In my equity research and valuation learning program, I cover quality and well research content. I cover diverse industry business models. Okay, and I have a growing community. Okay, so, and I also have the list of topics which I cover, which on the slide, which will help you become a well-rounded, thorough analyst. All right. So get in touch if you interested in learning more details about this program. All right. Thank you. All right. So now I've pulled open the slide that I use to assess moat in any business. Okay. So let's see how does this company how does this company fare against each of the drivers of moat that I've listed in this slide. Okay, in this framework. Okay. So, so we already spoke about distribution. Okay, distribution is one driver, a key driver of moat in this business. Okay, because of the scale they have all over the country. The other driver is product portfolio, because they have like 85,000 SKUs. Okay, so as we discussed, key hospitals or pharmacies would do business with companies which have a huge product portfolio. Okay, so they'll rather engage with fewer distributors who have a wider product basket than engage with so many different small distributors who have a smaller product basket. Okay, so एक product differentiation एक आ जाता है. Okay, and उससे आपका थोड़ा switching cost भी आ जाता है. Okay, and then the next one is in my list is
capital allocation. Okay, so this is something that I would say, as we discussed, this has not been proven yet. So the management, of course, has a lot to do here. But until now, there are a few positive things that you can see when it comes to capital allocation, because a lot of the subsidiaries have been doing well, they have been profitable, and they have been growing well. But then there are also subsidiaries which have not been doing well. Okay, and there have been some instances of misappropriation of fund in certain subsidiaries as well. This is a key monitorable. So this something which also could be a driver of moat in the future in the business. Okay, but certainly this needs to be monitored very closely. Okay, so these are some of the drivers of moat, and then competition. Okay, that Entero looks to be a among the three main competitors, three main players, organized players in this business. Entero looks to be the most clean one. Okay, in terms of balance sheet, clean hai. Okay, and plus they don't have a channel conflict, they don't have a conflict of interest like Kaimed. Okay, so all these drivers which I've just marked, okay, to me it gives a moat to this business. Okay, so because आपको टोटल क्या जज करना है कि all these drivers of moat should ideally lead to two things: growth and ROIC. Growth तो आ रहा है. Okay? ROIC is something which I believe should be delivered in the future, not right now. Right now ROIC is below cost of capital. Okay, below cost of capital, but you would expect कि as and when the management is able to deliver on reduction in working capital, okay, and is able to, let's say, uh, do a good job at integrating different subsidiaries, okay, then this ROIC should start ticking up as well. Okay, so अगर ये हो जाता है तो certainly there would be this business would be a widely moated business. And when I use the word wide moat, what I mean by that is, as per Morningstar, a wide moated business is that business which is able to deliver excess returns on capital for a period of at least 20 years. मतलब ROIC, return on capital, okay, return on capital exceeds cost of capital, okay, और इससे जो excess return आता है, that is for a period of minimum 20 years. Okay? So assuming कि ROIC eventually थोड़ा बढ़ जाता है, and all of these drivers of moat playing out for this company, then this business would be able to deliver excess return for 20 years. Why 20 years? See, because as we had discussed, there is a long runway of growth in this business. यहाँ पे if you see, okay, the market in India is very fragmented right now. So there is certainly a long runway of growth in this business. Okay, so in fact, as we had discussed early on, where India is right now, US was at the same place around 40-50 years ago. Okay, so this is certainly a multi-decadal opportunity of consolidation. Okay, so that's why if the management is able to do certain things right, then a lot of drivers of moat could be playing out for this business, and this business will eventually be able to deliver excess returns on capital for 20 years. And that is something that I've assumed in my valuation as well. Okay, so now with that said, let's hop on to the valuation. If you're a budding investor interested in learning thorough fundamental analysis and valuation, or if you're an aspiring equity research analyst, financial analyst, or a consultant who's interested in learning these skills to get into such roles, okay, then I have a program suited to your needs. Okay? In my equity research and valuation learning program, I cover quality and well-researched content. I cover diverse industry business models. Okay, and I have a growing community. Okay. So, and I also have the list of topics which I cover, which on the slide, which will help you become a well-rounded, thorough analyst. All right. So get in touch if you interested in learning more details about this program. All right. Thank you. Right. Now, I promise you that I will also go to the valuation. Okay, so let me spend some time on the valuation, and that's it. We'll conclude. All right, now let's discuss the valuation of this business really quickly. Okay, so the PE ratio is what, 44.3. Okay, so let's compute the PEG ratio. So PEG ratio would be 44 divided by the growth the street is expecting is around 30%, okay, for the next few years or so. So the PEG ratio is 1.5. So anything below 1.5, you would say that it's an interesting opportunity. So right now I think it's at the borderline. So to me, on a relative pricing standpoint, it looks reasonably priced, okay, from a relative standpoint. Okay. Now let me also walk you through the outcomes of my Chalu quick DC evaluation. Okay.
So see, the market size right now is this much, 2 lakh 80. Hope my screen is visible. Yeah, 2,80,000 CR. Assuming it balloons to under 7 lakh CR and then it grows to 9 lakh CR in 15 and 20 years respectively. Okay. And Entero's market share right now is 2%. And now, assuming the market share is able to grab a higher share, okay, there's a lot of consolidation in the industry. There are 3, 4 players. So it's able to get a market share of close to 15% over the next 15, 20 years. Okay. And also, this is one assumption. The second assumption is that it's able to uh, demonstrate a slight increase in EBIT margin from 3% to 4%. Okay. And then it's also able to increase capital turns, capital efficiency from over 3 to around 6. Okay. Because this business, ये volume का धंधा है. So you would expect that the management is able to sweat their assets even more. It's able to reduce their working capital, and the management has communicated that they are on path to reduce their working capital. So assuming all of that plays out, assuming the management is able to slightly increase the margin, okay, and also deliver on capital efficiency, okay, increase the capital efficiency, okay, then and also, of course, as I said, assuming they also are able to grab a higher market share of around 15% over the next 20 years, then the fair share value is around 1,200 rupees and the equity value is 5,200 rupees. Okay, 5,200 CR. Okay, so which is very close to the price at which the company is trading right now. Okay, so if you also want to compare let's say, calculate the uh, return expectation. So the fair EV EBIT as per my quick high in the sky DCF is 31, right? Okay. Now, assuming if 5 years out from now, let's say the company trades at the EV to EBIT multiple is, let's say in the bull case, it's 25. Okay. Let's say in the base case, the multiple drops to, let me just say 18. Okay. And I'm just doing this high in the sky math here. Okay. So enterprise value कितना हो जाएगा? Enterprise value, okay, 5 years out from now in the bull case will be 25 times. 25 times. What is the EBIT? Okay. So this would be the EBIT. Sorry, enterprise value. Everything is, this is in CR. अरे यार, क्या हो गया? Okay. तो ये बुल केस हो गया. और बेस केस में क्या होगा? आपका जो ईवी होगा बेस केस में, कि वो हो जाएगा 18 टाइम्स एबिट. तो आपका एबिट इतना हो जाएगा अंडर 12,000 सीआर, 11,000 सीआर से थोड़ा सा ज्यादा. ओके, सो अभी ईवी कितना है? आई थिंक ईवी राइट नाउ इज व्हाट 5,237. ओके, माय स्क्रीन इज विजिबल राइट? या. ओके, सो 5,237 इज द ईवी राइट नाउ. सो रिटर्न कितना हो जाएगा बुल केस में? Okay, so and then so return would be what, 24% return on in the bull case and 16, 17% in the base case, assuming assuming they are able to increase the market share and the management is able to, let's say, increase their margin and also increase their capital efficiency. So assuming all of these things playing out, then this is what you could expect over a 5 year stretch. Okay, and honestly, if this plays out, this is not a 5 year story. This is a multi-decadal story. This is just not a 5 year story. अभी तो मैं बस return demonstrate कर रहा हूँ 5 year का. Okay, but see, let me tell you, guys, please do not act on my valuation, this high in the sky valuation. Okay, I've not done a detailed valuation, which is what I would like to do typically. Okay, and because see, and please understand, okay, this is a very I may have been a little, in fact, conservative with my assumptions. Okay, because I believe this is a very operationally complex, operationally heavy business to do. Okay, so even if the management is honest, there are a lot of things that could still go wrong. Okay, so it's a real test of management's execution capabilities, right? Okay, so let's see how that unfolds in the future. All right, but yeah, certainly this is an interesting opportunity. All right. Anyways, guys, let me conclude. So hope you found this helpful.
All right. So in conclusion, so we understood this particular industry, this theme, which is playing out in India, mirroring what has happened in the developed markets. So we understood the theme. We understood this business, Entero Healthcare, how we can go about analyzing this business, at least at a high level. Okay. And then we also looked at how you can go about assessing moat in this business. All right. And of course, that framework that we discussed, most assessment framework, can essentially apply to any business. All right. Okay. And a very important thing is we also looked at some of the risks which are very important, right? So please just don't believe in the theme. You got to look at the risks. Okay, अगर risk play out करने लगे तो सारा theme बैठा का बैठा रह जाएगा. So we looked at the risks as well. Okay, it's very important, of course, which we had previously uncovered from the annual report analysis. ठीक है, so annual report का video मैं link कर दूंगा. Okay, so yeah, and last but not the least, we also looked at the valuation of this business. All right. All right. So yeah. So with that said, let's conclude. Please do write to me if you have any questions. All right. Thank you.